All right, welcome to Talk Tickers. Today, we are diving deep into Amatek's Q4 2025 earnings call, which just dropped on February 3rd, 2026.
So here's the deal. AMETEK just posted a monster quarter. I mean, we're talking their fourth straight year of record results. But the stock actually dropped at first. What's up with that? We're going to get into that weird disconnect between the great numbers and their kind of cautious outlook and figure out what it all means for the stock.
Okay, so here's the game plan. We'll hit the Q4 numbers, then talk about the guidance that kind of freaked everybody out. From there, we'll look at management's playbook, and then wrap it all up with our rating and a trade idea. Sound good? Let's go.
You know, at the end of the day, this whole earnings report is like a classic Wall Street drama. It's this tug of war between amazing results right now versus a, let's say, cautious look at the future.
All right, let's start with the results. And let me be crystal clear here. They absolutely crushed it. This was a clean beat, firing on all cylinders.
So, adjusted EPS, $2.01. The street was looking for $1.94. So yeah, that's a solid 7-cent beat. Nice.
And how about the top line? Revenue shot up almost 14% year over year to $2.01 billion. That blew past expectations by a cool $60 million. Not bad at all.
Now this is where you really see their operational strength. Their core operating margins grew by 140 basis points. That's 1.4%. That's a huge deal. It tells you they're managing costs like pros and have some serious pricing power. And look, what's so impressive here is that it wasn't just one thing. They beat everywhere you look. Core sales growth was strong, and get this, a record backlog of almost $3.6 billion. That's up 9% from last year. That's some serious momentum they're carrying forward.
Okay, so everything looks amazing, right? But remember how I said the stock sold off at first? Well, despite all these great numbers, it did. And the reason for that whole mess comes down to just one thing, what they said about the next quarter.
So that's the million-dollar question, isn't it? Why on earth would the market smack down a stock after a record quarter? It's all about looking forward, not backward.
And here's where things get tricky. The market is always trying to predict the future, right? So it zeroed in on two little details. First, their full-year guidance midpoint was $7.97, just a hair under the $8.01 Wall Street wanted. And second, they mentioned tariff uncertainty as a risk. And boom, that's all it took for a knee-jerk sell-off.
So what did management do? Did they panic? Nope, not at all. They basically just pointed back to their playbook, you know? The one that's made them this incredible industrial compounding machine over the years.
And here it is, their four-step model. We like to call it the AMETEK flywheel. It's so simple, but so powerful. Step 1, they buy these awesome, niche-leading companies. Step 2, they plug them into their system and juice the margins. Step 3, that spits out a ton of cash. And Step 4, they use that cash to go buy the next company. It just keeps spinning and growing. It's really the secret sauce to their success.
So, someone on the call asked about those tariffs, right? And the CEO, Dave Zapaco, was super direct. He basically said, look, we've got a long history of dealing with this stuff. Our products are mission critical, so we have pricing power. We can offset inflation and tariffs. It's what we do. Total confidence.
So, that brings us to the big question. How do you weigh a fantastic quarter against a kind of cautious outlook? Let's get into our take on it and what our rating is. First off, let's just get some perspective here. Over the last year, AMETEK stock has smoked both its industrial peers and the S&P 500. So, let's be clear. This isn't some flash in the pan. This is a company that knows how to make money for its shareholders.
And really, it all boils down to this. What do you want to bet on? Do you bet on the market's short-term anxiety about the guidance? Or do you bet on a management team that has a long history of setting the bar low and then jumping right over it?
For us, the choice is clear. We believe execution always wins in the end. And for that reason, our rating on AMETEK is outperform.
Look, our thinking is pretty simple. Their business model, that flywheel we talked about, is just too strong to be derailed by a little macro uncertainty. We actually think that initial dip was a gift, a real buying opportunity. And here's our prediction. Come Q1, they're going to meet or beat the high end of their own guidance, and all those skeptics are going to go quiet.
All right, and that brings us to our final section. As always, a speculative trade idea based on everything we've just talked about.
The idea here is really straightforward. Go along the stock. We think the market just got way too caught up in some conservative guidance and completely overlooked a perfect quarter. The bet is that the story shifts back to their awesome execution. What can make that happen? Well, a big Q1 earnings beat would do it, or they can announce a big new acquisition with that $5 billion they have ready to go. And hey, we're not alone here. The sell side is still on board. KeyBank actually raised its price target to $260 after the call.
This is not financial advice.